The information in this podcast is current on the day of recording. It is general advice only, does not take your personal situation into account, and may not be suitable for you.
Welcome to Stocktake. My name's Gaurav Sodhi. Joining me today is editor John Addis. Hey, John.
Good morning, Gaurav.
And with us also is analyst Nick Cummings. Hello, Nick.
Morning, Gaurav. Morning, John.
Now, gents, I don't know if you've been following the news, but there's been a bit of a saga involving Aussie Broadband and Superloop. And it's a particular interest to us because we've been long-time holders of Aussie Broadband. I hold it in my own portfolio. I've done that since just post-IPO, which is, I think now, we're talking 4 or 5 years ago. Been listed a while, but it's been a tremendously successful little business. We've written about it a lot. So if you want more background on Aussie Broadband, I suggest hitting the website and reading some of the old reviews. But we're not here to sing the praises of Aussie today. Have you guys been following what's been happening with this Superloop takeover?
It sounds like an absolute shit show.
That's exactly what it is.
Debacle.
Okay, let's give some background first of all. So Aussie Broadband is an NBN reseller, but it's also got other parts of the business it's growing. But it has made 2 acquisitions over the last couple of years, 2 largish acquisitions. And we've made the case that what they're buying is not customers, but they're buying capability to expand the business into more profitable, stickier areas rather than just reselling NBN. Superloop, which is the other protagonist in this tale, is I call it a bit of a failure. Are you guys familiar with what's happened with Superloop over its short life?
No, not really.
So Superloop was founded by Bevan Slattery, which, look, I must admit, I think I don't have any particular fondness or intrigue about him, but the market seems to love him. He founded NextDC, but has had very little to do with the success of NextDC, which is really down to the excellent management led by Craig Scrooge. And also, there's a couple of other ASX-listed businesses. Megaport, which I don't think has quite been a success story yet, but may prove us wrong and one day do well. But he's got this big reputation, right? And Superloop is one of his darlings. Superloop started off with this ambition to build a whole bunch of fiber all over Australia, Singapore, and Hong Kong. And it failed spectacularly. And so they started changing their strategy, and they've now become a more traditional NBN reseller. But they've still got all this legacy fiber lying around. So one of the good things about that business is that it has a lot of its own infrastructure, and the management now is much better. It's actually chaired by the ex-founder of Amasin, who I actually rate. But I haven't been all that thrilled with the business strategy. So we've never been involved with Superloop. I've always avoided it, and I'm not interested in buying it. But Aussie is, and they made a bid to buy Superloop. What they didn't realize was that Superloop has a subsidiary in Singapore. I think they make about 20% of their revenue out of Singapore, which I was surprised. I didn't realize it was that high. But there's a little law in Singapore that says that if you're going to be a shareholder of a telco licensee in Singapore, you have to get permission from the regulator to get more than 12% equity stake. So Aussie Broadband, during this rush to make an offer for Superloop, didn't consult the Singaporean regulatory authority, and they bought a 20% stake on market in Superloop when they should have gone to Singapore and got permission from the regulator there.
And did they buy that stake from a load of funds?
I think they just bought it on market, or maybe they bought it from funds. It doesn't really matter how they got it, but they got it without checking with the regulators in Singapore. And look, that's a pretty obscure little rule that I'm not sure how many investors were aware of. But the lawyers doing the due diligence on this probably should have highlighted before the fact. But anyway,
it's more the advisors stuff up than
absolutely
Aussie Broadband.
Yeah.
I'm not sure you would expect Aussie Broadband to know that. Yeah, absolutely. But they've now been forced by a court order to sell part of their stake. So their stake has fallen from 19.9% down to 11.9% to keep it just below that 12% threshold demanded by the regulator. It makes the acquisition of Superloop much more difficult. And the other thing that's made the acquisition of Superloop more difficult is the fact that the share price has rocketed because Superloop has taken Origin, which is a major wholesale customer of Aussie Broadband, away. So
it all looks a bit fishy, this, don't you think?
Yeah, it's all a bit weird because Aussie's share price too has fallen, and I think it was an all-scrip offer. Is that right, Gaurav?
Yes, that's right.
So this becomes really difficult now as one share price falls and the other goes up. If they come back, it's going to cost them a lot more. They're going to give away a lot more of the business. It's just an absolute debacle.
Well, I think it's
hard to follow. It's been really hard to follow.
I think what surprised me is the general pessimism that's surrounded Aussie since the bid looks like it's going to fail. You know, I'm surprised how the market has penalised Aussie Broadband because they've actually made a profit on the holding that they have, and I think it's about $30 million at current prices that they're up from their holding on Superloop. Now, Aussie is a $1 billion business, so $30 million isn't a huge deal. But this is not as though they've thrown money away. You know, all the fees and time that they've spent, they're going to recoup that with the profit from the Aussie stake.
Is it the Origin deal potentially that they've lost that customer?
Yes, they have. They have lost that customer, and that was about $15 to $17 million in EBITDA per year. And Superloop has taken that customer, but I would rather Aussie lose a customer rather than hang on to them and make a negligible return from that customer. If you look at the deal that Superloop has struck with Origin, they are giving away 13% of their equity, which I think is worth about $100 million.
Yeah.
Giving that away to Origin in order to claim them as a customer. And as a customer, they would make about $19 million in EBITDA per year. And Origin gets $100 million in equity. I don't know. If Aussie struck that deal, I'd be pretty upset as a shareholder. So I'm quite happy to see Origin move. And this is kind of Origin.
You don't think that they did a bad deal with Origin just to keep Aussie Broadband away?
No. I think a deal like this would have taken months. Yeah. Unless.
Yeah. So why do they want to buy it? What is it about Superloop that they like?
I think they want the excess fiber. So Superloop is a better managed business than it was, but I still am not thrilled with the strategy. So they really have all these financial metrics they're trying to hit, whereas a lot of Aussie's metrics are really customer focused and strategy focused, and they kind of let the financials take care of themselves. I think that's the way a business ought to be run. You ought to run the business to solve a problem and to satisfy a need, and then manage. You know, the financial results come after you do those things correctly. But Superloop has outlined all these financial metrics that they want to hit beforehand, and then they're looking for ways to hit them with strategy and need. I just think that's the other way around.
Yeah,
it's because it's kind of odd here where Aussie Broadband's been this fabulously run business made, I think it was, did you say $15 to $17 million in EBITDA off this contract, and then Superloop comes along, gets the contract. Presumably they had to drive a hard bargain. Obviously they gave away a lot of equity, but they're going to make a little bit more off it. It seems aggressive, I think.
Yeah, I'm interested in that as well. I'm not sure how, because Aussie's costs are quite low. The only thing I can think of is that Superloop owns a lot of its own infrastructure, so it's possible that they're using their own fiber to support the Origin, the Origin customer. So that may lower costs, and that's also why Aussie wanted them, I would suggest. I mean, they have a bit of momentum now. They are gaining market share, but they're mostly taking market share from the incumbents rather than the challengers. But the attractive thing about Superloop is the idle infrastructure that's lying there. So if you're a larger business who can potentially make better use of that idle infrastructure, I think it's cheaper probably to buy Superloop than to lay it down again yourself. And I think that's what Aussie was trying to do.
Do you think the deal's going to go through now?
No. It's
because
very
Superloop's a lot more expensive than it was a few months ago.
Yes. I think it was I like that Aussie tried to strike the deal when the share price of Superloop was low, but I also like that they're willing now to walk away when the finances don't stack up. And I actually take comfort from the fact that they were quite happy to let Origin go when the finances didn't stack up. So I actually think Aussie walks away from this. I'm quite happy as a shareholder with how they've acted. And the market's reaction to this is predictably negative. And I think if we're patient, we might get another shot at buying some more Aussie, which we've had multiple shots at. And every time we've had a buy on it, it's actually done quite well. So
that would be nice.
Looking forward to adding to my stake if we get a chance.
Very nice.
That would be good. Do
you boys own any Aussie?
No.
I'd
like to.
Yeah.
It's a curious business because from the very beginning, I remember doing the Dragon's Den on Aussie Broadband, and I said quite openly that there is no competitive advantage that I can see in this business. It's fiercely competitive, it's cutthroat, and Aussie is charging far more than any of its competitors. But I really I think this is a good example of where the story of the business can be more important than the numbers it's outputting at the moment. Because this is a company founded by 3 people in regional Victoria who started with nothing. And they fought off, I think it's 90 competitors in the NBN reseller space. And they did it with no obvious advantage. And they came out with, I think they're now number 4, the 4th biggest NBN reseller in the entire market.
That's
and
incredible.
They make more money per customer than anyone else. I think they made more money than Telstra did one year from NBN, even though they have maybe 3 or 4% of its
Amazing.
customers.
Amazing.
Yeah.
And this is the kind of business I think I am increasingly gravitating towards. One that doesn't have a big, shiny competitive advantage, but just does everything better than its competitors. I've named this Hustle. If you read Intelligent Investor, you'll notice a bit of talk about Hustle. And businesses with Hustle is, they're hard to identify, but they're hard to compete with. And Aussie's got it in spades.
You almost couldn't think of a worse industry.
Yes, that's right.
to create a business over the last 2 decades than Australian telcos, or reselling the NBN. But yeah, they've done amazing.
Nick, I wanted to speak about an industry that is almost the opposite of the NBN reseller industry, and that's plane manufacturing. Now, there are 2 giant plane manufacturers in the world. I remember looking at this years ago and thinking, all the margins from air travel, this is where they land. The huge increase in people flying all around the world, it's not the airlines capturing that extra revenue. It's the plane manufacturers, and these ought to be amazing businesses. Airbus probably is a pretty decent business. What the heck has gone wrong with Boeing? Why is this not an amazing business? Was it ever, and why isn't it now?
Yeah, it's a great question. I don't
Everything's gone wrong.
Yeah, well, everything's gone wrong. That's probably the best place to start. But
can we start with that top assertion that this is where the cream of industry profits ultimately lies?
I think it's
the manufacture of aircraft.
It's airport.
Airports. Yeah, I'll give you that.
I don't fully agree with it. I think, and you've got to widen that a bit further to like a Booking.com that's been the online marketplace for travel agents. Taking all the market share of Flight Centre and those sorts of physical store operators. That's where a lot of the industry profits goes. There's also some really niche aircraft suppliers,
caterers.
Yeah, stuff like that. As John said, the airports are fabulous businesses. Airlines have been notoriously terrible businesses, and these aircraft manufacturers probably sit somewhere in the middle. Like if you look at a duopoly, like a MasterCard or a Visa, that earn 70% EBIT margins, roughly, somewhere like that. Boeing earn about 10% and Airbus earn 10%. Gross margins are about 20% for each of these companies. So even though they're a duopoly, the margin profile of these companies doesn't really, highlight an industry that has incredible profitability. I don't think I would say that the cream of the industry profits falls to these two. If they're run right, like Airbus has been, they can be tremendous businesses. Boeing is the case where it all goes wrong, and just about everything has. But for most of its history, Boeing has been an incredible business. It was about 3 decades ago where this started to change. They bought McDonnell Douglas. I don't know if you guys remember that business. Yeah. And that was pretty much a failing aircraft manufacturer where the accountants were in charge rather than the engineers. And Boeing had always been engineering-led business. If you go back through their old or their prior CEOs in the 40s, 50s, 70s, and 80s, most of them had aeronautical engineering experience. They were the guys on the production floor designing these aircraft, and then eventually got to the top job. What McDonnell Douglas brought in was this culture where profits came before engineering, or that it was let's cut costs at every corner rather than innovate, make new aircraft. McDonnell Douglas had always preferred to upgrade their existing planes rather than create new bodies or new types of aircraft, just because that is a really expensive thing to do. Boeing had always excelled at that. So Boeing in the 80s and early 70s had 85% market share. Airbus, that was sort of an upstart in the early 70s, they had about 5 or 10%, and they've been gradually taking market share over the last 4 or 5 decades, and that's really accelerated now because this culture of financialization has obviously sadly come to a head with those 2 plane crashes of the 737 Maxes.
Can I ask, how can one relatively small acquisition change such a big business?
Well, it changed the culture.
It changed the culture, and this wasn't happening in a vacuum either. This was at the same time where GE and Jack Welch, GE was the most valuable company in the world in 2000. Everyone on Wall Street loved GE, and they had that ruthless culture of firing the bottom 10% of staff every year. And industrial companies around the world thought this is how you run a business, particularly American companies where capitalism's put over all other, or shareholders are put over all other stakeholders. So that was another factor. If you go through their executive management team all the way to David Calhoun, who's their latest CEO, who has said he's stepping down by the end of the year now, they're all actually Jack Welch protégés. So they all worked under Jack Welch back at GE. So it's like I said, this whole cost-cutting structure has not only come from McDonnell Douglas, but it's been imported from GE as well. And we all know what happened there. It's just been an absolute disaster.
Wow. Is there a CEO who's fallen harder than Jack Welch? I mean, I remember him being idolized, and he's now basically felled 2 giant businesses.
Yeah, exactly right. No, it's. I mean, how many business textbooks have been written by, or little excerpts in? I remember at uni, like McKinsey had a few studies on how GE did it, and like even though they were only growing, revenue at 3, 4, 5% a year, they were just able to produce amazing returns on capital and amazing share price returns, and it's just all blown up. It's
McKinsey. You know what? There are 2 companies, I reckon, if you wipe from the face of the earth, they'll make the earth better. We'll come to the second one in a moment, but one of them is definitely McKinsey.
Yeah. I'd say that one of the interesting things about Boeing is how you see the difference between the short-term incentives of management to earn lots of money over their 2 or 3 year tenure versus the long-term interests of shareholders. And people like us might want to invest in a company like Boeing for 10 years or more, but the management are not focused on that. They're interested in getting the share price up, cutting costs, doing buybacks, and not investing billions and billions of dollars to develop new planes. It's what Nick said earlier about McDonnell Douglas with the 737 at Boeing. They had the opportunity to invest in a new model. They decided to do it cheaply. And I'd say that their personal incentives had to have something to do with that. So it's an interesting example in capitalism where you have the management actually working against the interests of long-term shareholders to line their own pockets, I'd say.
Nick, is there a straight line between the outcomes at Boeing and the incentives of management?
I think there probably is. I haven't delved too much into it, but just to go to John's point about share buybacks, I mean, between 2014, 2018, before they had that first crash, they bought back $58 billion worth of stock. So it's just an incredible amount. And this powered share price returns. And if you look at most American companies, their executive compensation's based off earnings per share. So if you lower the share count and grow earnings at the same time, you get amazing payouts. And I think it was Dennis Muhlenberg that was the CEO for most of that period. He did get, he was one of the best paid executives or highest paid executives in America. So there definitely is short-term incentives for these CEOs to just push production probably quicker than they needed to push, to cut corners on safety, to just do pretty much anything to grow earnings per share. I mean, that is the 737 MAX disaster in a couple of sentences. Is just that they, instead of redoing the plane, which was what they probably should have done, they redid this two engines that were heavier. They moved them forward on the plane. They then created this MCAS system, and everything was designed to, not get pilots to have to retrain. So the earnings just grew and grew and grew, but underneath the problems were just growing as well.
So again, it sounds like management were chasing a bunch of financial outcomes and not trying to solve the problem or satisfy the customer.
Yeah, I mean, they moved the HQ to Chicago to get away from the engineers.
Yeah.
And then they moved production of the Dreamliner to South Carolina, or was it North Carolina? Charleston, I think.
Yeah, South Carolina.
Yeah, to so where the South tends to be much more favourable to non-unionised workforces. And it turns out now the union, Boeing's union, is arguing that they need a board seat because they're the only people who can save the bloody company.
Yeah,
and I think there's probably some truth incredible. To that. It's an incredible story of how a company has just been picked apart through the personal financial interests and a kind of cult of Jack Welch.
Yeah, I mean, just to pick up on some of those ones, like they also divested Spirit Aerosystems, which sort of makes the structure of the whole plane back in 2005. James McInerney, who was who was CEO between 2005 and 2015, really accelerated a lot of these cost-cutting initiatives at his suppliers. So he came out and publicly said in 2013 that we have no fly lists across our company if suppliers aren't willing to cut costs. So the problems aren't just Boeing. They pushed the problems down the supply chain and made this whole industry less safe.
Yeah. And one of the interesting things about this, Nick, is, the whistleblower, I forget his name now, but he was allegedly committed suicide on the third day before his deposition in court about all the things that Boeing were doing. And, there's lots of conspiracy theories, could Boeing really murder one of its ex-employees, which I seriously doubt. But the fact that people think that this might even be possible shows you how far this company has fallen. And from an investing perspective, I think if a company is attacking whistleblowers rather than listening to them, that is I think a significant indication of a cultural problem. If you've got an internal problem, people are willing to raise it with you, you really should pay them attention. If you just want to shut them up, then that is an indicator of bigger problems inside the business generally.
Absolutely. I couldn't agree more. I mean, when these two aircraft crashes happened, management and the board's first thought was to go out and blame them that it was an Ethiopian pilot problem or an Indonesian pilot problem. It couldn't happen in America. It's because of the pilots' training when it was their bloody software that did it. It's just like there's been... I don't know. I don't even know how to put it. It makes me just angry, and I just find myself sometimes when I'm looking to go somewhere, I look at the plane like, it's a 737 MAX, and unfortunately, a lot of the time you can't avoid it. But that's where it's got to for a lot of people. I've spoken to friends as well. They're a bit worried about flying them, and I completely agree with that. And that Alaska Airlines, where the door blew out of the plane only a few months ago, is just another example of it. It's all a bit infuriating, to be honest. And I think, and I don't want to say that shareholders have to take some of the blame, but I think the blame's further out than just Boeing. It's a Wall Street. It's how society's been driven to this being, profit over everything. And I think, this is where this goes completely wrong. And in the worst possible company where you can't get things completely wrong.
Yeah.
So, Nick, what's the broader lesson here for you? I mean, how has this changed the way that you look at other businesses?
I've always considered culture really, really important. And I think that's the lesson here, is that we, as investors, we only know so much about a business, and there's only so much you can find out from just reading annual reports, but actually finding out whether the employees like to come to work every day, whether they have an appropriate culture in the business. And so with Boeing, it should be safety is the priority above everything else. If there's delays or anything, that safety is put first over profits. And from the outside, that's hard to pick up. But there were signs here that this was happening, and that the Boeing was growing faster than they probably should have, cutting corners, and it was sort of celebrated. And I think the lesson is we've got to come back and go, well, is this sustainable? Is this actually right thing to do, as John was talking about, long-term for shareholders and long-term by all stakeholders in the business? And I think that's sometimes lost where, as an investor, sometimes you find yourself or others in the market find themselves celebrating job cuts because that means profits are up. But that also influences a company's culture, and it might just be kicking the can down the road for bigger problems.
My lesson, I'd agree with that, Nick. My lesson from this is that there's a downside to long-term investing, and Boeing demonstrates it when you've got people inside the company who are working purely for the short term. And this is why the founders having a large stake in a business is such a good thing, because you tend to offset that risk of just managers who are in the seat for 2 or 3 years, just incentivized to maximize returns over that short-term period. And this makes the case for founders, I think. And I think you could also make a case for getting rid of short-term incentives, and you have a long-term incentive, and maybe that runs over 10 years. And you get paid by the company in stock or something 3 years after you've left. I would be in favor of making incentives for managers much, much more long-term, and you would reduce the risks of this kind of thing that's happened to Boeing.
Yeah. No, look, I would agree with both of that. For me, I deeply disdain the investing approach that prioritizes numbers and financials over everything else. And I think Boeing is a perfect example of that, because at the same time that all the financial metrics were looking fantastic, the business was falling apart. And if all you do is investigate numbers, you would have completely missed that. In fact, you would have made the wrong decision every time. So
Agreed.
For me, that just highlights that point.
Yeah.
And John, I also like the point about founders. We tend to look for founders a lot more now these days. Although, as Dubber shows, founders is no silver bullet either. There can be lots of problems.
Just reduces the risk. It doesn't eliminate it.
Yes, that's right.
Yeah.
John, let's go on to another lesson that you've been talking about more recently, and that's concerning FOMO. Might be some people who don't know what FOMO is, but talk us through your thoughts about it.
It's not really FOMO. What I've been thinking about is the stocks that I spend a lot of time looking at, a lot of time learning about, and thinking that the opportunity was good, and being convinced ultimately that it was a good opportunity, and not actually pressing the buy button. And probably the most recent one was Facebook, which I was looking at quite heavily, as you guys know, towards the end of 2022.
Oh yeah,
that's which I think is now up.
You were banging the table on Facebook.
I was, but I wasn't banging it hard enough for me. And I look back on that and just try and think, well, does that irritate me? It definitely does irritate me. And when I try and analyze how I felt about it and how I feel about it now, I just wonder whether I kind of create reasons for missing out on it. Like, I don't really think that Facebook is a net benefit to society. I have a kind of distaste for Mark Zuckerberg. I think Facebook and Meta have done a lot of good things, but on the whole, they're a net negative. And I just wonder whether I use that as an excuse for not making 5 times the amount of money I would have put into it. Because I think, you know that I bought some coal stocks, Gaurav, but I just couldn't do it. And I sold them 6 weeks later because I just felt dirty about it. And I make no judgments about anybody else. That's just me personally. And I don't want to have that sort of alignment between, you know, what I value in life and how my actions align with those things. I don't want to live in that world of cognitive dissonance, which the psychologists talk about. And thinking about that in terms of Facebook, you know, I do have some regret over it. And it's not FOMO as such, but because I think that happens before.
Yeah, you're right.
Before the event, it's more like the psychologists have this term called near-miss bias. You know, so when people are playing poker machines, the machines will often have, you know, you might have 4 reels and 3 lions come up and one of them's a monkey and you go, oh, that's so close. And the next one down is a lion. And that makes people think they're on the verge of about to become winners. I think there's a little bit of that in there. So it'd be interesting just to have a quick discussion about how you guys feel about stuff that you nearly bought but missed out.
Yeah, look, I've got to say, it's just not, I just don't agonize over decisions that way. There's been plenty of stocks I've missed out on. Yeah. I think it is lucky because it's not something I've deliberately cultivated. It's just a part of my psychology where I don't really, I just don't really feel the pang of missing out too much. Because I always think I'm an uber optimist, and I always think there's another opportunity around the corner.
And there is.
And there always is. Yeah. And so, although I have been paying a lot more attention about getting my weightings, my portfolio allocations correct, rather than my stock selections. You know, I'm actually finding, I think I can identify decent stocks, and I think we all can, and that's probably not the hard part. It's taking maximum benefit when you do identify an opportunity, because opportunities are actually quite rare. A good opportunity, if we can find 2 a year, I reckon that's what I generally find. I probably find 2 good opportunities a year.
Yeah.
So the task then becomes maximizing the benefit from those opportunities. And there's probably not. I don't worry about missing out. I don't really have a better answer for you. Maybe Nick does. Nick, what do you do? What's the secret?
Oh, I don't have any secrets. I don't get too emotional about missing out on an opportunity. I actually get far more emotional when I've lost money. I think that's where that's where my focus is. And sometimes it's I think better to think about it in terms of, instead of how can I find the next NVIDIA, how can I avoid the next whatever, Wirecard or and I think if you actually just avoid the losers, that sort of the winners sort of take care of themselves. So I don't ever get the FOMO about missing an NVIDIA or even maybe a WiseTech or something like that. It just doesn't really happen.
So, John, is it the fact that you missed out on the profit that they've been thinking about, or is it the fact that
it's a sunk cost, I think.
Right. Okay.
Yeah. You know, I don't worry about missing out on NVIDIA.
Yeah.
The idea that I didn't invest in Afterpay, for example, I feel quite proud of that in a way, because I just don't think it's as high quality a business that we really should be buying ourselves. But with Facebook, I did spend a lot of time on it, and I feel as though, I suppose psychologically, I should have made something from it.
Oh, I understand. Okay.
Yeah. How do you guys feel when you spend, months learning about a company, and at the end of it, you go, I'd really like to buy this business, but this is stopping me?
No, I've got it. Okay, no, I understand what you're saying now, and I will bring up an example. So PWR, which I bought to the Dragon's Den twice. Once, I think, both at $3 something. And it was knocked back, and I was pretty annoyed that it was knocked back. But usually when something gets knocked back, I buy it in larger chunks in my own portfolio, which is what happened with MinRes, and I thank you all for that.
Yeah.
But this time I didn't, and that's been bugging me for years. So yeah, you're right, actually. I think you're right, John. I think it's when you've done the work and you've come to a conclusion in your mind, but then you don't act.
Yeah.
That's when it gets annoying.
I know that PWR bugs you because we've spoken about it on a few occasions, and you're still a little bit wound up about it.
Yeah, I'm about.
I
get a bit angry
about Facebook. Yeah,
and is that you about you? You've taken Facebook remarkably calmly, I have to say, because you've lost more money on. I think I've probably lost more by not buying PWR.
It's up 5 times in 14 to 15 months, I think.
Yeah. No, that's worse. That's worse. Yeah.
It's a nice IRR.
Nick, what about you? Is it that sunk cost?
Yeah, I agree. I think if a company fits within your circle of competence and you've done all the work, and you miss the opportunity, then that hurts a lot.
Yeah,
that does sting. I think that's where, and maybe that's how Facebook was for John.
Yeah, just talking about this is making me feel a little bit more angry. Slightly more, even more self-loathing within me.
Oh dear. All right. Well, it sounds like we better wrap things up before John starts really getting cross. Yeah, I know. Or even worse, yes, before the weeping begins. Well, John, thanks very much for your time today.
Thank you. It's been fun.
Nick, appreciate you joining us as well.
Thank you.
And for everyone else, thank you for listening.